All right, ladies and gentlemen, we're looking at EURUSD today, and it's really interesting what the markets are doing this season. And last week, I was expecting a buy to come in on EURUSD. If we look very closely, we're going to see that last week we ran these lows. So we took these lows. I think that was 2 weeks ago. Or was it last week? All right, so it was just this week. So we took these lows, or we took that low there. And when we took the low, I was expecting price to, begin to push back to the upside. But that wasn't the case. In fact, after we took the low, we ran up, broke through the short-term high, traded back into this order block in here, and the move wasn't very impressive following that retracement. In fact, the market just pretty much was dancing around the rest of the time within the week. I did take some buys in here, made some, bits of profit. But we took some buys in here, but the move that I was expecting did not come true. However, I want us to pay very big attention to why that could be the case and why we could be looking to continue to trade this up until at least these lows here. There's a very good chance that we could come down here before we begin to expect the big moves to happen. So I want us to pay attention to something. First of all, we have had these series. If we are to look at it channel wise, or to look at it if we look at it on the line chart, you clearly see that this was the last high. With this low here, we started from here, we produced this high, and since producing this high, we have not produced any new high since December 2023. We have not produced any more new highs since. So we came down for the whole of 2024. We have basically been trending to the downside. So it's been all the way down. We breached this low, we run up, and then subsequently there's a good chance that we might be breaching this low as well, because just look at it. Since this was December 2023, I think this high peaked at this was the year open. Where's the year open? All right, so the year opened and we just quickly started running down. We ran down, broke this low, ran down again, retraced, broke this low, and then we have now retraced again. So what's the possibility of what we could see? There's a chance that we could see the market come down and not, the high that we're expecting to see, or the reversal that we're expecting to see. And the reason that could simply be the case is primarily because if we come over here and look at the commitment of traders reports, what we have here. So starting this, let's say we peaked out, we were having, by 7th of May, we were having 4,500 positive net positions. By 4th of May, by 5th of, by 7th of May, sorry. But fast forward all the way to the 4th of June, we peaked at 67,000. And since 67,000 in terms of positive net positioning, what happened? On the 11th, a report came out, we had 43. And then just look at last week here. They closed a whopping 16,233 shorts. 233 longs were closed. A whopping 16,233 longs were closed. And guess what was added? 19,460 shorts were added to the market, bringing the net positioning down significantly to 7,951. So you can see that there is no bullish intention on the side of the institutions. The institutions do not have any bullish plans whatsoever for these markets. And if the institutions do not have bullish plans for this market, it tells you one thing: we're going down. And that is looking at the long-term direction and equally following that long-term direction. So where does that leave us? If we come back to our charts and we get back to candlesticks, it leaves us somewhere. Where that leaves us is this buy-side liquidity here. This becomes the hook point, or this becomes all eyes now rest on this liquidity sitting above here. If, for instance, we come here and we hold a significant close above and we begin to consolidate, yes, that might be an intention to go higher. But if anything leads us into this space here and we break back down and begin to consolidate below this high, it is an opening to go to the downside. Primarily because we now start to see clearly that the institutions have closed out heavily. The commercial side of the institutions, they've closed out heavily on their longs, and they've added massively to the sells. It tells you one thing: the asset price can only go down. It's not going to go up. The asset price is definitely going to go down. So this is where that leaves us in terms of market structure and pricing. Remember what we have: the last low produced in December last year. We traded below it. We traded up, we didn't trade as high as that high. We traded below this low again. And subsequently, that tells you one thing: we are likely to equally trade below this low again. I mean, by the time we trade below, maybe we could start some form of fresh retracements, but who knows? But at the moment in price, where we are currently sitting at a point where institutions are closing aggressively on the shorts, are closing aggressively on the longs, and adding to the shorts massively. So most likely this point could be where we go from, or we could still go from this point here to the downside. So this is what the market is looking like. EURUSD, this is the outlook of the market, and quite frankly, I sincerely hope that this has provided value to you. Please subscribe to the channel, and also share the video with your trading friends. This video, of course, we are going to be bringing more and more content like this your way here on the channel, Chukwudo Trading Academy. This is what we're about: trading education, and that is it, and also providing great clarity in the direction of the market. So I hope this helps you. I wish you very good luck trading this week. Of course, happy trading, and cheers.